All right, welcome to this monthly masterclass. Today is 11th of September at 3:05. So I hope you can see my screen and hear me clear. So we have an analog clock, as I told you, a digital one, analog one with a second hand, and a calendar. These are the only three things you need for trading. Calendar to know that you are between Monday to Friday, except Christmas Day and 1st of January. And then we have the analog to exactly know the hour and the time, and the digital and the analog is for the second hand. So these three are the only things which you need for trading. Now this is Sunday, so I am removing them or not removing, actually bringing it to different sites, different screens. Okay, so now we'll start with our favorite general financial product advice. NP Financials Pty Limited. NP Financials or NPF advises all service recipients of the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials shall be considered as a financial trading recommendation. I'll give you 10 more seconds to go through it and let me know when you are done.
I'm done.
Yeah,
Fantastic.
I'm done. I'm done.
Very good. All right. So Marty, can you see my screen? Because you wrote that you can only message. Yeah. What about Marty?
Sure can. I can see your
Yeah.
screen.
Fantastic. Brilliant. All right. After this, what we will do today and our monthly class. Today we have the pleasure of having the guest speaker as Mauricio. He will share a tremendous thing with us, extremely important thing, which is the pip size calculator, automatic pip size calculator in MetaTrader 4. And he will talk about whether it is available in MetaTrader 5 also. If it is, then we'll listen to him at around 4:10. First 1 hour I'll talk. The agenda is very simple as usual. First 1 hour I'll take you through all most of the instruments, most of the asset classes, and what is happening and what is going to have what is happening, how to take advantage of what is happening, and so on and so forth. And then after that, after my speak, um, someone has joined, I think. Mm. After my speak, good afternoon, Valinda. How are you? Valinda, can you? Yeah, you can unmute and talk so that we know you can talk. I can
Yes,
listen.
sorry, sir.
Yeah,
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 good
yeah.
afternoon, sir. I'm good.
Yeah.
How about you?
Confirmed. You can talk. I can listen, and I am good. How are you?
I'm good, sir. Really good.
Very good, fantastic. So we just started. So first 1 hour, we'll talk about the markets. We'll answer all your questions. Please type in your questions in the chat box. You know where the chat box is. This is the chat box here. Please, well, Valinda said hello, everyone. And then after that, I'd request Mauricio to introduce, and we learn from him how to pip size calculator, how the trade size calculator work automatically in MetaTrader, and then we have all the important market updates, geopolitical and trading related analysis from our senior trader Marty Stewart. All right, so you know you can stop me anytime for any questions, and then we'll go for from there. So first of all, I'll do this 24 instruments which I always do. So let me show you those 25 instruments. 24, I think. So we'll go with S&P, ASX, Hang Seng one by one. All right. So let's okay, before that, if you want to start any to for me to start any with your questions, please let me know. Do you have any specific question to start? You can unmute and ask, or you can type in. I'll give you 20 seconds. else I'll get ready
Alert triggered.
for the market analysis and the opportunities which are there in the market. So I'll start with I have not yet got Nikhil. Good morning, Nikhil. How are you? We have just started.
Yeah, hi Professor. Good morning.
Fantastic, brilliant, very good.
Can,
I hope you can see my screen and you can hear.
yeah, I can see you.
Very good. And then Mauricio is saying,
Perfect.
can you look at gold, please? Mauricio is requesting for gold. We'll start with gold. This is our first
Okay.
analysis, so we'll go to gold, which is XAUUST.
USD. Yes,
Alright.
USD.
So
Yeah.
Mauricio, if you want me to analyze any time frame, you can let me know. Otherwise, I prefer to do it in a daily time frame.
Yeah.
Otherwise, you
Daily is
can.
fine, thank you. Yeah.
Daily is fine. Thank you. He said. All right. So I'll start with the daily time frame, and then what we can see here. First thing first, we can clearly see two things here. One is the numerous number of supports here at around 1700, where Marty gave us a wonderful call, and we took that
Yes.
call and made 100 points from our Discord. And Marty's call was from going long on absolutely at the bottom at 1705. And
Mm-hmm.
we are in our Discord. Those of you who are following our Discord at the Elliott Wave channel, and we saw
Mm-hmm.
what we saw here, that this market went up from here to there, and almost such a big retracement it did, because the trend was down. Because the trend was down, we can say the trend was down. And this is if you don't mind, Nikhil, if you can mute your mic, that would be great. Otherwise, I can hear my own voice.
I have done that. I have done
Okay,
that. I
very
have
good,
done that.
excellent. So I think every one of you have muted your mic unless and until you are speaking. So please mute your mic. Otherwise, I can hear my voice. All right. So so this was downtrend initially, and then within that downtrend we had a double bottom here, and the double bottom happened from 14th of July to 21st of July, 14th of July to 21st of July. And this is a class A double bottom, because this is the second swing low is lower than the first. And within that period of time, within that short period of time, what we saw there is a favorite of Balinder, who is a favorite of
It's a
our
divergence, sir.
divergence. Yeah, Balinder always goes for this divergence. And so what we saw, divergence and a double bottom, and market went up. Exactly, market went up. If we draw a Fibonacci, it could have been gone to this 200 moving average, but it could not. So it went up only to the exact dot point of 61.8. So if you can see, Fibonacci is a wonderful tool to let us know much in advance that where price is stopping. So price exactly stopped at the 61.8 level at there. So Fibonacci, when we are here, Fibonacci itself told us that it is going to be a challenge here to cross 61.8. It did, and it stopped here with the all buyers out. If you can remember, this is all buyers out. And then from there, market came down, and then at this point, we had a all sellers out. So how to handle that? So just to answer your question, so this is impulsive, this is corrective, and this can be impulsive. But for this to be impulsive, which Marty will correct us if I am talking long, because he is the master of Elliott Wave, not me. I understand a little bit of price action bar by bar. That's my strength. But his strength is understanding the waves, which we listen to him at around 4:30. So market came down. For this market to go down, for me, so this is very clear to me. If this market has to go down, then it has to close below the low of this, and our rule of 4 has to happen. Close below bearish bar, touch close below low bearish bar, and low taken out. If this is not happening, then I'll take advantage of two things. Now I am answering your question, Mauricio. So if this this is not happening at that day, if this is not happening at that day,
Alert.
at that period, who is giving alert now? Oh my god, this fellow is giving me alert, which is Ether. Ether is doing something now, because Ether is now trading on Sunday, thanks to the brokers who are giving us quotes on Ether, but it will be humongous spread, so we don't trade. All right. So at this point what we saw, since this is not being broken, so what at this time what we saw, this is the weekly 200, the W200 means, if I make this 200, if I make this a weekly chart, if I make this a weekly chart and then make this, because it's 118 units, that's why the 200 moving average is not coming. So I'll have to make that more than 200, so make it 718 for example. Yeah, so now the 200 is there, now the 200 moving average is there. If I go to that 200 moving average and then go for the value of that 200 moving average, and the value will come at 1691.5, 1691.5. So if you if you you have two ways to take advantage of this. Remember 91.5, so 91.5. So you can go to your daily chart, and then do two things. One thing, you can do this as a weekly line from the weekly, that was 16, I told you what, 91.5, isn't it? 1691.5. Yeah. So weekly 200 is 61.9, 61. You can actually go for the horizontal line and display price. In display price it will be having 691.5. So that is one way to take advantage of this, because you know, even in a daily chart, you know why it happened here, why it happening here. Knowing that is extremely important. And the other way you can do this is right click on the chart, and then you can make the settings price as the moving average of 800. So if I write there moving average, 200 multiplied by 5 is how much? 1000, isn't it? Roughly 1000, because 200-day moving average in a daily chart multiplied by 5, that is 1000 days in a daily chart, will be equal to almost, not mathematically exactly, will be almost equal to a weekly 200 moving average. Do you agree with me on this small little thing?
It will be 1400 actually, sir.
1400. Okay, let's see what happened. I'll do 1000 first. I prefer 1000 because we do not use Saturday Sunday bar. Okay, we do not use Saturday Sunday bar, that's why we'll be using 1000. If you force me to do 1400, I'll do that. See what happened? Yep.
Okay.
Yeah.
So you are basically not trading the taking the non-trading days. That's the basic idea.
Yeah. So if I do 1400, it goes to nowhere. It goes to nowhere. So that's a brilliant point. Those of you who told me 1400 and I said to you 1000, no one is wrong, no one is correct, but the thing which we can learn from each other, and that is the feedback which I am getting from all the across the globe, which I am getting feedback, and this is from our YouTube channel. And you can, I think you can read, and one person wrote, he's not yet our customer or client, and we have not asked him. He saw our videos in YouTube and wrote, by far one of the absolute best videos I have watched on YouTube, concise, does not require a financial genius to understand. I certainly wish this guide taught my finance course in my MBA. So if people are writing this, that means we are adding some value. We are adding some value to most of their understanding. Another person is like, thank you. This is the best stock trading course that I have watched. It is so much easier to understand. Thank you so much for sharing. They are writing of their own because they are getting value, as you are getting month after month, day after day. I must thank these fellows who are sharing their experience, Earl and then SKZ, and I cannot thank you enough for this information, Yusuf, it is so much of effort put into this video. Honestly, thank you for all your value information and
Alert triggered.
keep up the good work. Thank you, Yusuf. Thanks a ton. Thanks a ton. And then this is in Russian language, and then is asking for potential beginners video, which we will do, and then um, so much of feedback we are getting. Thank you so very much. Like Yagis wrote, thank you so much for your videos. It is really difficult to find reliable sources when it comes to stock trading. It is he's so correct, so correct, because we are in this business for long, for almost 15 years now, and we know there is no holy grail. So what we do, we only try to select the high probability trade setups, and that's what we have written, because what happens is it's really difficult to find reliable sources when it comes to stock trading, as most of the sales people represent themselves as senior traders. So these are the facts, and it is so well feedback we got, and thank you so very much for the wonderful feedback you people all are giving. Thank you, really appreciate. Now why I showed you that, because the value, this in the one sentence of difference between 1400 and 1000 had asked me, had reminded me to give this show you the feedback from the various people. Why? Because if we are doing 1400 and not using Saturday Sunday, then it is a mistake, then is a gross mistake. So that's why we have to take 1000 only, because the Monday, Tuesday, Wednesday, Thursday, Friday, there are 5 working days, so 200 multiplied by 5 is 1000. So now we have
Sir, can I just contribute over here?
Go.
My thought process.
Go.
Okay. What I wanted to say was that actually, as you have put in a figure of 1000 as the number of days which you are taking there on the chart, there is a optimization, a visual optimization can be also done, that how many times that the price was bouncing back, that optimization can be done, and that can be done through only trial and error basis also. That's what I was trying to say.
Absolutely.
The times it was bouncing from the same moving average on that particular time frame. So that is going to give us better results on the back testing, and maybe that will be of the forward optimization can be also be done. So that's my logic in which I basically put a moving average, that every time on that particular time frame, and that particularly instrument also. That's what I'm trying to say. That you said that 1000 is working fine today.
Understood.
1000 is working fine today, but maybe afterwards it might be sometime 1200 or 1100 or maybe 900 is striking more. So we have to little bit optimize.
Sorry. So I have to stop you there, because we don't do that over optimization. Thank you for your contribution, and it means a lot to us. But when you started saying 1100, 900, so that is not the correct way to do. So first of all, what the value which we are adding here, how many of you, honestly tell me, how many of you are taking the existence of 200 moving average in a weekly, in a daily chart? Tell me honestly, how many? No one probably, isn't it?
Once in a while, sir. I always pay attention what's going on there.
Very good. So once in a while, or may not be never. So that is the value which we are trying to add here. Mauricio, myself, and Sri and Girija, every one of us contribute this. That is why these master classes are so very popular across the globe. And what I have been talking for last 5 minutes is, we can take advantage of this moving average as a moving average itself, because there is a lot of if I take 1000, as I told you, it is not equal to the actual 1691 placement of the moving average. So I don't prefer 1000. So that's why I will delete this. But if you want to backtest it, you can backtest it. And coming back to Nikhil question of over optimization of 1100 and 900, no, we don't do that, because over optimization is a killer. we have been seeing for last so many years, over optimization can be a killer. So that's why those of you who are with us for so long time, so much of long time, 4 years, 5 years, 6 years, know that we only use 200 moving average, and only use pivot points, only use some support and resistances, and only use the Fibonacci standard and the yearly quarterly demand and supply line. So again, to answer your question, Ben, so it was Mauricio, I think. So if since it did not cross this fellow, then the next thing we need to take advantage is Fibonacci. So we'll draw Fibonacci from this to this. We'll draw Fibonacci from the last swing low to this swing low when we are here. That's why the Fibonacci this modules and units is so important. Those of you who are Sri and all who all have done this Fibonacci 1 month course on the Fibonacci trading is so important. And so we'll draw the Fibonacci from that swing low to this swing low, and then see if the 88.6 has crossed or not. If the 88.6 has crossed, then we'll delete that Fibonacci. Look at that, my dear friend. This 88.6 Fibonacci from where we have drawn from here to here, it actually hold the price absolutely to the dot. 88.6 was 1695.5 and the close is 1695.7. How uncanny is that? All right. So what we saw a Fibonacci last fort was 88.6, which hold the price there, and then this is not a divergence because this value of our own proprietary divergence indicator is 4764 and this is 4768, so this is less, so this is not a divergence, isn't it, Valinder? So now that gold is getting a support from this multiple 1 2 3 4 5 supports and has did a candlestick. If I change this to candlestick, it is a engulfing. It is a clear engulfing. I hope so, if I'm not mistaken. So let's do that. So what I'll do that, change it to engulfing, sorry, candlestick. Yeah, so it is engulfing here, and this is also engulfing. This is those of you who are doing the candlestick back testing now know this is an engulfing, and at the same time on this at this point of the support zone, this is the zone of support. As we know, this is a zone of support coming from the multiple supports line. Doesn't matter whether it is a yearly line or a quarterly line or a monthly line or a Fibonacci line or a weekly 200 moving average, which we discussed today, and then if this high to be taken out, then probably we are going to go long. But Marty gave call at 1605 in his in our Elliott wave on date on 7th of September. Long 1705, and then he closed the trade at 1715 with 100 points. Fantastic, brilliant. So he closed that here. So now coming back, I know that it is taking a little bit time, but it needs to take that much of time to know bar by bar. So to answer your question, Mauricio, again, so probably if because we have also given a call here in our Discord and our client arena in the trade idea section. I think we have given a call in the gold, isn't it? Haven't we?
Yes, that's right. And I think you've given that as well in another channel.
Yeah.
Yep.
So we have given, fantastic. Thank you very much. And this was the call here on the 8th of September. Gold, we went on the Discord, we went 1705. On the client arena, on our private membership area, we went long on 1723. So if we have gone long on 1723 or on 1705, so what you can do, if you have taken those trade ideas or if you have done your own analysis, so now this is a little bit of back-to-back engulfing. This is engulfing, back-to-back engulfing. Ben is doing the practice task, and I think Ben is doing his candlestick practice task. Right, Ben? Am I correct in saying that these two are back-to-back candlesticks engulfing?
Yes, indeed.
Yeah, very good. Thank you very much. And then what I will do, then since the price is here, from our knowledge of Fibonacci, what we will do, we will draw a Fibonacci from here to there, from the immediate swing high to the immediate swing low, and then not to clutter the chart, because if we clutter the chart, then our brain will be cluttered. We'll take the we'll take this out, which the market participants are not respecting, which the market participants are not respecting. So we'll do take that out, take that out, take that out, take that. So we took everything out, and then we can take this display percentage also, because we know that is 50%. So as of now, what we can see, if we just keep the 50% and the 61.8%, I prefer the 61.8 because that is the inverse of the golden ratio, which is 1.618. So if you divide 1 by 1.618, you get 0.618. In percentage, that is 61.8. So I'll keep this, I'll hang on to the trade, and to see what is happening at around 1736, or if it is closing below this green line and then low taken out, then we'll possibly close the trade. Otherwise, we'll be having possible impulsive multi will correct us, and then a deep correction, and then a possible, who knows. That is my answer to your question, Mauricio. Did I answer your question?
Yes, yes. Thank you very much. Went really, really well, in depth. Thank you.
Fantastic, brilliant, excellent. The next question, please. Okay, if
I want to ask you a question.
go.
Okay, crude. Can we analyze crude also?
Crude oil.
WTI?
Okay, Nikhil is asking crude oil. Thank you for that. I love questions. I always say do not suffer in silence. So please ask questions. Otherwise, I'll go to the brilliant job work done by Girija in her analysis on USD JPY and GBP USD, which I want to share. All right. So crude. All right. So this is what crude oil CL in pro real time. Pro real time it is CL, and in 8 cap it is in 8 cap it is USO USD USO United States oil versus against the United States dollar, USO versus. All right, so brilliant here. So first thing first, we see here on the crude oil on a daily should I do Nikhil?
So the whole time analysis, starting from the monthly, weekly, daily, and
brilliant, fantastic, very good.
That's good.
Yeah. That's a fantastic approach. Go for start with monthly and then weekly and daily. So what you can do, we go to the monthly chart here. And in the monthly chart, who bought this oil at 80 cents when Russia and Saudi Arabia were fighting for producing oil and reducing the crude oil to negative in West Texas? Future price went
if that was done, then I would have been that was a lottery. That was a lottery.
Very honest.
Would have been a lottery.
Very honest. Yeah. All right, from monthly perspective, what we can see here, if we are here at this point. I always see the last, I do not see what happened here. So always we are here. So this month is only 11 days old, so don't get 11 days old. Don't get greed. Don't be greedy to declare this as a hammer. Who thinks this is a hammer?
First of all, can I contribute here?
Go.
I don't think so it is a hammer, because first of all, the main important thing is that we are on the 11th of the month. First of all, it has to complete.
That is the only thing. That is no first and second. Thank you, Nikhil. Okay. You correct. You hit the nail. So 11th of September. Now we have another 18 days to go, and then this is not a hammer. We don't know where it will finish. It will go finish here, it will go finish there, I don't know, no one knows. But the only thing we know is this is a swing high. Those of you who are practicing swing high, swing low, only try on the vicinity of the price. The price is 8580, and now the vicinity is 8506, which is a swing high monthly. This is a monthly, yeah. So what we see as of now on 11th, price is above this swing high. So this can be a polarity change. This can be a polarity change. What is a polarity change? In the swing low, swing high here actually forced price to come down, before price went up. So at this point it was a resistance, now when the resistance was broken, here, my dear friend, when the resistance was broken here, here at this point, when the resistance was broken here, boom you go, so when the resistance is broken, then it is having a tendency, in the corrective action, it can act as a support. So that is a polarity change. Once it was a resistance, and then it can be a support. Can be, I say can be, because price can and will do whatever it does. Price is always correct. Alright, so it can be a support from the monthly perspective, Nikhil, and then I go to the weekly to see what the weekly is doing. Weekly is also doing the same thing. It is trying to respect that 8,500 as a whole number, very big whole number. 8,500, 9,000, 9,500, 12,000, all those numbers, 7,000, 7,500, 8,000, extremely extremely potentially round, emotional round numbers. So it is trying to stay above that 8,500 for how many weeks? 1, 2, 3, 4, 5, 6. If I take this one, then 9. For the last 6 weeks, it is trying to stay above 8,500. That's exactly what the weekly is telling. So from the weekly perspective, what we can do, because we are here, we can take advantage of what is the swing low. We cannot take this swing low because it is almost gone there. So we can go from here to take a swing low. Those of you who are practicing the confluence of Fibonacci, this is a lesson for them. So I have gone from here to there, and again I'll go from here to there, and then probably I'll go crazy with all these numbers. Then what I have to do, I have to unclutter. How to unclutter? Go to configure, take this all out. You need to take all out. Only you need to keep the one which the market participants are respecting. This is respected. So yeah, I'll keep this one. I'll take this one out. Yeah, so that is for that Fibonacci, and then for this Fibonacci, that this is a confluence of Fibonacci. Girija is practicing now, and she is mastering that very well. And now I'll take this take this out. Even you can take the 100 and because you have oblique line. Don't take the oblique line, because then in that case you will be losing the context. Don't take that out. Alright, so let me take this out. Alright, so we have only two. Display price also gone. So we have only two here, and both of them are coming from Fibonacci confluence of 61.8, and price is actually has crossed that 61.8. So from the Fibonacci perspective, nothing is helping, so I'll delete that, because the multiple 61.8 has not helping us. So I'll not take that one. Then I'll go to the last, which is the daily time frame. In the daily time frame, Omicron happened or whatever happened here, that's it. Now we can see a beautiful crack and snapback with a morning star. Ben, am I right? Anyone?
Yes, indeed. Yeah, well, yeah.
Yeah. So this is the beauty. Yeah, morning star. This is the beauty of seeing the study, and seeing the practice task in our instruction based discussions in a live chart as it is happening now. So we must do the my back testing, we must do the simulation, because history repeats itself in trading every moment. So every moment. So this is a wonderful morning star at a support of 8506, which is coming from monthly, as we saw. And to answer your question, Nikhil, I am happy with this morning star, and happy with this crack and snapback. Now this is the rule of 4. If this high is taken out by our ESD, entry stop distance, then we'll be long from here, and then I'll be hoping possibly either to follow the Fibonacci, or if I draw Fibonacci from here to here, and then take the lines out immediately. That's my habit. So I don't clutter in my chart. So this gone. I'll keep this one 38. I'll take this all off. So either I will wait for what to see is 8,700, what price is doing 8,700, or the next Fibonacci level, or this support. Yes. So to answer your question, oil, we are bullish now. So did I answer your question?
And possible target you said according to the daily or the weekly? If you're
Possible
bullish also.
target, yeah, that's a good question, but everything cannot be answered in this monthly class because it will take a lot of time. So
Okay.
Alert
what
triggered.
I'll possibly do here in our to answer briefly your questions, in our instruction based discussions from commodity, forex, shares, bonds, indices, cryptocurrency, Elliott wave, and every asset class, we analyze. We have a fixed entry price, we have a fixed stop loss, which is according to our proprietary method, but we have a
Okay.
variable, target. Why? Because to maximize the profit potential. So that is why, to discuss all those variables, first of all, that is proprietary, we cannot discuss that, and then second, and then it will take time. So just to answer your questions, as you, since you were asking, I have to answer. What you can do is either you can take the advantage of the Fibonacci's like 31, 38.2, 50, and then 61.8, and then 78.6, and see where the price is, say, coming and then stopping and then reversing, coming, stopping, and reversing. You can do that, or you can take advantage of the monthly pivot, or you can take advantage of the monthly pivot, which I can always say, show you. So if you go there and then bring the add indicator and then pivot points, that is the monthly pivot which you can use. That also you can take advantage of that. So that also you can take advantage. So either the Fibonacci or the monthly pivot you can take advantage of. So advantage
Right.
to know the to know the target. Okay. Did
Okay.
I answer your
Thank
question?
you. Yeah, perfect. Thank you. Thank you for
Fantastic.
the explanation.
Next question. All right. If not, you may write down any question. Delete pivot points. Just to make the things clearer, I'm deleting which we have completed the if by mistake you delete this, if by mistake you delete this, or if by mistake you delete all objects, which is the most dangerous things to do. Delete all objects, something is there, delete all objects, then yeah, either you can delete this one, or you can maximum hide all objects, but if you delete all objects, that's a very dangerous one. So by mistake, if you do this in pro real time, delete all drawn objects, then what you have to do, you have to go quit and then don't save it. Then what you will do, you will lose last 1 hour of, say, whatever you have done. I'm happy with that because I have done a mistake, correct? All right. So if I've not got any questions, so then I'll go to what Girija has told me in her class. This is what Girija did. Girija, would you like to take the class with you with your understanding, or should I?
Sir, please go ahead. You know that like sometime I needs the words.
Yeah,
Thank you.
sometimes I also miss the entire language called English.
Yeah.
Then Marty, Ben, Mauritius help me to know what is English. Mm.
Because I have a cat which she's keep jumping over me and I'm screaming.
All right. So what Girija did, when she was having the regular weekly class, uh, on 7th of September, Wednesday, this when last Wednesday, she told me that she has drawn a line. Price was here, so she has drawn the line from this to this. Correct me if I am wrong, yeah, Girija. So this to this, and then she has drawn a Fibonacci extension because she completed the Fibonacci class because she is doing the Fibonacci practice task in our in our modules and units. She is doing the practice task as Ben is doing the candlestick, as Mauricio is doing the support and resistance. Yeah. So she did this valid trend line. Why this is a valid trend line? Because this is the swing low, this is the swing low. In between we have at least one swing high, and that swing high is taken out. So you can do that, and also you can just to add, you can add this because price is here, and also you can add this. That's known as a fan line. That's known as a fan line. You can do that. And if this is a swing high, I don't know, let me see, a swing low, the low is 136.22 1, and this is 31. Yeah, that is a swing low. So we can have these 4 lines if you want, otherwise you can have only 1 or 2 lines. Yeah, so let's say this is correct. I'll have only 1 or 2 lines. I'll delete this one. When time comes, I'll take advantage of that. All right, I'll delete this one. So so this is the trend line, and the most importantly what she did, she drew a Fibonacci from here to here. So I'll delete and then redraw. So I'll delete this, and then because price is here, and it has crossed the it has crossed this movement. When price has crossed that movement, whether it is retracement, then when price has crossed this entire length of this fellow, when a price has crossed this, then we need to to know how far price can go. To know how far price can go, we need to take advantage of a thing called Fibonacci extension. So we draw that, we use the same tool, but we have inverse that. So Fibonacci extension we have drawn from this to that, and then what we can do, we go here Fibonacci, and then take this one out. We keep this 161.8. yeah, we take that out. You can have 127.2 if you want. You can have 127.2. let's see. So we have drawn a Fibonacci extension, and it will tell us if price is reversing from 127.2 or 161.8. that is the advantage of Fibonacci, which is a leading indicator. There are very few leading indicators in this trading business. One is the pivot point because they come once in a month at the beginning of the month. Next one is the Fibonacci. We have drawn this Fibonacci on this date, which is 1st of September, to know what is going to happen after that. Yeah, and then the other one is divergence. That is a leading indicator. So she did that. She drew this Fibonacci, and she was observing now, and when price is going up, boom, it crossed the 127.2 here with a bang. So what is this telling us? Anyone?
All buyers out at resistance 2 of monthly.
All buyers out at resistance 2 of monthly. I don't know whether I deleted the monthly pivot point. Yeah, I did. Let me go what Valinder is saying. Pivot point monthly, resist monthly. This is monthly pivot point, and then resistance 2, resistance 2, resistance 1, resistance 2. This is the resistance 2 he's talking about. This is the resistance to his talking. Correct, Balinda?
Yes, sir.
But there is
for
no
the next month resistance to, like the coming month, if you draw a resistance monthly.
You mean
pivot
previous?
as well?
You mean previous month? Do you?
For everything, like even this bar is on a 5th of September actually. That's what I meant, sir.
Sorry, I'll go to 5th of September. Yeah, and this is 4th of September. This is 5th of September. Go.
Like if you draw the September pivot, monthly pivot, then you will see this is happening there actually.
Yeah. September pivot is already done. This is September pivot. See, this is 1st of September. This is September pivot. There is nothing. There is no line. Yeah. All right. Not a problem. So probably you got you are observing some other currency pair, I think. All right. So continue to that point there, So this was the break of previous month R2. This is previous month R2, and this is this month September. This is August month monthly resistance 2, and this is September resistance 1, and this is our Fibonacci. This is our Fibonacci. I'll just take that pivot point out for a moment, just because I'm concentrating on the Fibonacci. I can take that pivot point out, and I can bring that. How to take that pivot point out? Just take this out. It will be gone. Yeah, just take that out. So I have taken that out. It is what it is doing. It has crossed 127 with a bang. That means what? Market participants is not probably interested to respect this 127.2, or monthly R1 which was here, or previous month R2 which was here. So okay, if this is happening, that's fine, we can get in, because this can be a continuation bar, we can go long. Yeah. And if there is a resistance, then I would have respected exactly what Barinder said, with all buyers out. But there is nothing called, there is no resistance, and then there is nothing. So and then the interesting thing, I'll talk again. That's a very good reminder to me. In one of the feedback, one person wrote that price can stay long overbought. So I just type overbought. If I'll just try BOUGH. But I remember someone asking me a question: price can stay there for long overbought. I said that I'll be answering that question. Yeah, so I'm answering that person's question, who observed correctly that market can stay for very long period of time overbought without doing any divergence. Yeah, I'm just trying to give me 10 seconds. I'll just find it out, because I promise that I'll answer that question. Anyway, I'll answer, but I'll just find out yeah, someone talked about GDP, which I'll talk about. That is AK. I'll write it down. AK. I'll respond to AK also, and then I'll respond to other person who wrote about, that's fine. Overvalued, he said. Nadim said overvalued means overbought, same thing. And then we say that, yeah, it's correct. I'll show you SPX 500, how it stayed overbought from August 2022, February 2022. But here also we can see in front of us, it stayed overbought. Can you see that? This is overbought. So if you allow me to color this, so I'll color it with add color zone. The divergence indicator, proprietary divergence indicator, if it is going beyond overbought, then you turn it to be red. Then it turn it to be red. Oh my God, what did I do? If it turned out to be divergence indicator, if it is getting overbought, OBS overbought. Let me find out what is this. This is divergence. What overbought. I'll take this out. Yeah, OBL. So in the colored zone, we need to say an OBL. My mistake. I selected OBS. So OBL. If the divergence line is getting beyond overbought, and then I'll make this as red. So it will show me how long it can store. That it. How good is this red color? Who like this red color? So don't
Bears.
Go.
So saying bears like red color.
Like it?
Bears, bloodbath. Bears like red color.
I love it.
So that divergence indicator, that's a lagging one, right? It's not a
Divergence
leading indicator.
Yeah, as such, this is a momentum indicator which is capable of showing divergence. I said divergence indicator is a leading indicator. You are absolutely correct. Ben, I think it was, or Mauricio. Who was that?
Me, sorry.
Me means?
Mercio.
Ratio, yeah. So from this to this, from this swing low to that swing low, it was going down, and then this indicator in yellow, it went up. So this divergence is a leading indicator, because this divergence happening on this date is telling us there is a possibility that price will go up, and price went up. So that is why I say, when exactly the divergence happening, then only we can have that. Then only we can have that. Yeah. Like this one, price went up from swing high to swing high, but this fellow came down. This is the and price came down, price came down. Yeah, that is the beauty. All right, so now price is staying happily. Oh my dear God, what did I missed? By mistake I deleted the Fibonacci, so I'll go draw again Fibonacci. When I'm excited, I do all these mistakes. Sorry, I have to again redo it. Oh my God. All right, I did that again. It took me only 10 seconds. All right. Now, so I got my Fibonacci, lovely Fibonacci. Girija showed me. Yeah. So if the price can stay actually overbought, and it is overbought, it is stayed overbought, and now it bang, it completed the 120. It moved. It did not respected 127.2, and then what Girija was observing this Fibonacci, and that's my special music. And exactly at 161.8, look at this. Look at this. Thursday, she is having a session every Thursday, so this was the session time, and she said, ask me, I have drawn this, she has drawn this Fibonacci, and how good is this Fibonacci, she asked me. I said, oh my God, it is beautiful. How good is this? Can you see this? This Fibonacci, which was drawn from this swing high of 14th of July to this swing low of 2nd of August, gave us a Fibonacci much before 144.947, which is 161.8, which is the golden ratio, and price went up, which is 144.99, with due respect to the whole number of 145, but I would give more respect to the Fibonacci which was drawn by Girija at 144.95, and it stopped there, and we were discussing at this point, right, Girija? And what did I say after that on your class? This much you can
Yes,
say.
I was asking your opinion, like as per the table, that if I'm doing it correct, but we were thinking that whether it's going up or it's going down. So you were telling me that we have to respect on that level about the market, that what market decide to do. Yeah.
Yeah. So what we said, that at this point the market respected 161 point, it is the golden ratio. On
Yes.
the golden, fantastic. And on that date we said that we possible will be going short if this low is taken out. Yeah, we drew
Yes.
this line. You remember?
Yes.
We generally believe in it can take one, it cannot take two, but this, because it is 161.1 is there, for rule of 4 applies, touch close below, not this is a bearish bar, but that was a preference, and then low
Yes.
taken out, and then rest is history. Yeah. So
Yes.
now we have crossed this line. Yeah.
Yes.
So that was a fantastic Fibonacci. Any comment on this Fibonacci from anyone?
Fantastic.
Anyone?
Right.
Anyone? Someone is trying to say something? Unmute and talk. Alright, so Marty is saying, please share some insights from stop loss distances required for pending orders. Okay, Marty, can you elaborate a little bit on that, please? What exactly you are asking?
So I'm wanting to get a tighter stop loss for my pending orders. Since it's an area of concern, leaving an order open in the market without watching it, it's comes a situation where you don't really want to be having huge stop losses just to make sure you don't get stopped out. Just wondering if you could share some insights about tightening the
Brilliant.
distance.
And any time frame you have in your mind?
Any time frame, I believe whatever concept you would share would be pretty universal.
Yeah, absolutely correct. Very good. Fantastic question. When we ask a question like myself or any one of us or Marty, or when I am answering, or anyone, me or any one of you can answer any question. When when we are asking question or when we are responding to a question, when the question supposing is coming from Marty, it's not that he is asking probably for himself. He's probably asking for the group, for the group to be benefited. That's why we learned from each other. We learn from each other, isn't it? It is so important to learn from each other. So
Yes.
now okay, let me go to that. All right. So all okay, before we answer that question, because it is such a brilliant high level question, before answering that question, I'll ask a couple of conceptual question to you. There is no correct or wrong answer. Don't hesitate to answer me. But I just want to know, I just want to clear your doubts regarding this brilliant question asked by Marty. All right. So I'll first ask, if you are going long, from here or here, supposing we are going long here, when all this nonsense are getting clearer. So when we are going long here, long means what? Long means what? Buy order or sell order?
Bye.
Brilliant question, isn't it? long,
101.
no, long means buy order. Fantastic. No, that was not my question. That was a hidden question. The actual question is, when we buy, we put a long order, buy order. Then what type of order? What order type is the stop loss?
It's a hook entry.
My dear friend, my question is a little bit different. I am asking, if yeah, you are right. You are right. This is a hook entry. You are right. This is a hook entry. But my question is, when we are taking a hook entry long, those of you who do not know hook entry, it is discussed in our instruction-based discussions in strategy on this forex beginners or forex advanced or professional hook entry. So Balinder is absolutely right. But my question is a little bit different. I am not asking what type of entry is this. I am asking, when you are entering, are we supposed to put a stop loss? Yes or no?
Yes.
Definitely.
Yes.
Definitely.
So when we are going long, what is that order type of the stop loss we are putting?
Is it, sir, if I'm not wrong, is it buy limit or?
Any other answer? For a
It's
long
a
Normal
order.
stop.
Huh?
Stop. It's a normal stop loss, like a stop loss.
first off.
What is the order type, my dear friend? Which we discussed in foundation. If you have forgotten
Buy
trader
stop.
foundation, huh?
Buy stop.
Stop. Buy stop.
Buy stop.
Buy stop,
One we are using buy limit and then one we are using buy stop.
my dear friend. No, incorrect answer. Not yet there. Not yet there. So those
Oh,
of
stop. Okay, got it, sir. I
Ca-
got your question actually.
come again.
Yes, I found your question. Like you are asking what type of order. I know what type of order we can put it there.
Yeah, please go. Please answer.
It's a buy stop
Buy stop.
as soon as the high is taken out.
Any other answer? I can give hint.
The stop loss would be a short.
Correct. That is the correct answer by the person who asked the question. Alright. So when please remember, when we are buying, we are putting a sell order for to stop us if price goes below that order type, which is a short order type, sell order type. Correct. When we buy, we need to put a buy order to go long. That's what you exactly said, which is a buy limit, buy stop. But that was not my question. My question is, what is your sell stop order? Sell stop order is a sell stop order. Simple. Unbelievable. Unbelievable. Your sell stop order is a sell stop order. That's why they are known as sell stop order. Why Marty has to come and rescue you? Alright, anyway. Alright. So I'll answer that brilliant question by a small example of what happened. Every day it happens and we learn. So now we know that to going long, we are placing a buy limit or buy stop. We never put a buy stop for sell, my dear friend. Don't do that mistake. Like some people do a mistake, a horrible mistake, on a pip size calculation. That's why Mauricio will help us. Pip size calculation, some people do mistake to blow their account. So that can happen, it has happened to with me also. So they are very important things which we must learn, by doing. So we must know what type of order type, what type of order, my English, what type of order, or what order type, where is the sell stop order is a sell stop order. That's it. Sell and stop. All right. So why am I telling all these things and not answering Marty's question? Because these are important. Why it is important? Because okay. Marty said one thing: whatever we explain for 1 minute or 5 minute or 15 minute charts will be valid, exactly valid for a 4 hour, 12 hour, and daily chart, weekly chart. So time frame is not important. All right. So this market, as we all know, Hang Seng, our favorite after ASX, probably DAX and S&P 500. This market opens at 11:15. Who is from Hong Kong? Who has visited Hong Kong? Doesn't matter, that is not the question. All right. Hong Kong, time wise, GMT wise, we at Melbourne, it's GMT plus 10. So whatever Hong Kong is, at 11:15 our time, whatever our time, 11:15 a.m., 11:15 a.m., this market open, market open, bang, 11:15. Now this fellow is telling what? This single bar is telling,
Armageddon.
huh?
Armageddon.
Sorry, slow.
Armageddon.
I don't know English. Why are you blaming me? No,
It's a
tell
very
me, tell me in technical term. I don't understand, sir. Honestly speaking, tell me
Okay.
in
Strong selling.
strong
bearish
selling,
candle. Bearish candle.
very scandal. Any other answer? Any other thing? Any other? Hmm?
So the market open low.
Market open low, very close. What? Any other thinking? Just think random and answer. Who's stopping you? Otherwise, I'll tell my understanding.
All sellers entered actually.
All sellers enter. Huh? Very good.
Yeah.
Any other question? Any other answer? Oh my goodness, I did a mistake. All right. Any other answer?
Then there
Retest.
can be a crack and snapback, sir.
Yes. So two things, my dear friend. While you were answering, I was drawing some lines, haphazard lines, not haphazard. So I'm still on Marty's question. Yeah, I'm not running away. I'm still on Marty's question, but I'll answer in such a way that you understand much better next time. You remember. All right. So when the market opens, and before the market open at 11 team, bang, what is going on in the market for last 10 hours?
Long.
Very good, very good, excellent. Long, because impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive. Why they are impulsive? Because they are longer. Marty will tell you better. This is longer. This length of the green angular bar is more longer than this. This is longer than this. This is longer than this. Is longer than. Alright. So that is impulsive. So this is uptrend, my dear friend. Uptrend. So professionals will be possibly looking to buy. Amateurs will be possibly looking to sell here. All right. So that is the point. I'm still on Marty's question. Yeah. All right. So why this type of things happen every now and then? Anyone? Oh, we already answered that question 5 minutes before. Now tell me why this bar happened as this way. Anyone?
Just to stop out the weaker hands.
Yes, Nikhil, you are so good. Mm, 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 mm. Getting there, All right. So this happens because if the market has to fill the buy orders to go long, that is buy orders. If the market has to fill the buy orders to go long, they need sell orders. To get sell orders, this has to happen. So amateurs will sell, and there will be Balinda said crack and snapback will happen because this fellow did not close below the midpoint of this, big bar. Neither it closed below the tangential line of that what is it, tangential line
200 bar of 15 minutes.
tangential line to this arc, which is, yeah, it is not coming to my mind. Yeah, polarity change. When the polarity got changed from the red 200 to the green 200, we draw a tangent line. If we draw a tangent line, it did not close below that tangent line, and all important, it did not close below this all buyers out midpoint. Are you with me?
Yes.
If that is not happening, then people would be buying. All right, now I'll come to questions of Marty. All right, so all of us have got this clear understanding. Anyone having any question? No one is having question. Brilliant. All right. So that means what? All the weak hands, as Nikhil said, all the amateurs got out because they were selling in an uptrend. That's why the corrective action is so dangerous. In an uptrend, never ever do that. And then we saw a morning star, not very good one. Firstly, we saw a hammer, which is a good one, but a kind of morning star. In a intraday chart of 5 minutes, what can you expect? It's very volatile. Extremely volatile. All right. We cannot expect more. So this is a kind of morning star. I'm not happy with this because it has to a little bit down, but in a 5-minute chart I can do that. So now I'm answering Marty's question. Supposing this is a crack and snapback on the morning star and the 200 moving average, we are going long here. We are putting the stop loss 63 point, and then if we bring our target of mainly, let's see, maybe daily pivot line or something like that. Yeah, so and then we'll do that. Yeah, so this is S1, this is pivot, and somewhere here it will be R1. All right, so if we R1 is not yet there, but if we extend our understanding from here, from this point to that point, that is 76 points. So if we are taking a stop loss of 63 and targeting a 76 point, is it a good possible entry of a trade?
It is.
It is, because it is more than one. People say I don't take if it is not 3:1. I ask them simple question: how do you know that it is going to be 3:1 or 2:1? People say no, I will not take if the reward to risk is not 2:1. So it is a different approach altogether. But I ask simple question: how do you know that it will stop here at 1% or it will go there to make a 4%? How do you know? How anyone can know? I would say no one. Go.
I would contribute to that one thing.
Elliot,
That we control our risk, but we cannot control our reward.
Yeah, absolutely correct. Nikhil said we control our risk, we cannot control our risk, because that's why we have 5 different ways to maximize our trade. Marty, you were saying something?
Elliot Wade can give us an indication.
Elliot Webb can give us an indication, which we will talk. After this, I'll request Mauricio to get started after answering this question, and then Marty will take over. All right. So I'm still answering his question. So the initial stop loss is around 63 for a profit of 76. Then he's asking about tightening. We are laughing. Our stop is here. We are safe. And who knew that this bar is coming? Anyone? No one. Even anyone. No one. No one can anticipate that this bar is coming when anyone has taken the trade here. Anyone has taken a trade here, 63 point stop loss, and then 74 point profit, and when he sees his profit to 145, he is laughing or crying? Laughing, isn't it? So what you can do, my dear friend, this is in time independent. That's why I can hide the time. So if my stop loss is here initially, if my stop loss is here, then possibly what we can do, we can move this stop loss to there, next swing low. So this is the swing low, this is the swing low, next swing low. Or because this is a big bar, my dear friend, big bar. So what you can do, either you can move the tighten the stop loss here, you can tighten the stop loss here, and two things you can observe. The next thing which you can observe is extend this pivot point physically or mentally, and then draw a line of the midpoint of this bar, roughly. You can calculate and draw exactly midpoint. I would say around this point is a midpoint, or you can do a midpoint. If the midpoint of the body, tell me some mathematics. If the close is 19062 and the open is 18941, what is the midpoint? Who is the mathematical genius here?
Can you show me again? Yeah, open. 18,900.
Open is 18941. Just take the whole number, 18941, and close
It's
is
a 1919001.
19001. Balinder is the only mathematician. So 19001. So I'll draw 19001. So this is the roughly midpoint. Yeah. So
Exact midpoint.
So mentally you put the stop here, but physically you put the stop there. Okay. Physically now you have moved 3 steps. 1, 2, 3. Now you are in money. You are in money because you have entered here. So you are in money. You have moved 3, tighten the stop loss, but you can be mentally prepared if the market is going below 1900, whole number. My goodness, oh my god, such a big number. How can it be? All right, 19,000, big number, and then we can have a mental stop, but don't put the stop here. Put the stop here, physical. This is mental. Let's see. Now remember, we are running a profit of how much percentage? We have taken a risk of 60. What happened? Sorry, we taken a risk of 64. We are running at a profit of 145. That is 2.5. Correct? And then oh god, oh my god. Now the R1 is broken. And we are laughing at a profit of 204 divided by 63 is how much? Who is talking? I cannot hear. Can you come close to the mic and talk?
Almost 1:4.
Yeah,
The reward is 1:4.
1 is to 3.8. Yeah, 1 is to 3.8. Yeah. So now what you can do, we can move the stop loss. We are taking the risk. Now we are moving the stop loss below the midpoint. Yeah, don't be too smart to move the stop loss here, then you can be taken out and all your profit possibly will be gone for 30-40%. Yeah, don't do that. So move the stop loss here, play safe, move the stop loss here, and then oh god, my goodness, look at this fellow. So now we are running at a profit of 304, 277 versus 63. How much roughly? 4.5%. Yeah, 4.5%. Then what you do, you move the stop loss to, now it is 1 here. What is this? I don't know. This is monthly. This is monthly line. This is monthly line, and this is resistance 1. Now you tighten your stop loss to below the line, 5 piece below the line. Okay. So 4 times we have moved the stop, and next see what happens. Now something is going on around 19,400, 19,200. So if price is closing below this rule of 4 is happening, then we will get out. But we are not moving the stop loss. Am I answering the question, Marty, till now?
Yes.
All right. So you let me know if I have to change the time frame. But this is a better example to understand. All right. So what you can do, we are going, we are crossing the 19,200. What we can do, we can move the hide the stop loss below this monthly. Don't blame. So not blame. Chase. Yeah. Chase the do not chase the bar. No, do not chase price. So hide here. Don't put your stop loss here. Put the stop loss here. Put the stop loss here. Oh my God! It's still going. Oh God. Oh God. It went up to R2. It went up to R2. 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 So if it is going up to R2, and this capable of doing that, and oil is also capable of doing that, and anyone is capable of doing this, including Ethereum and Sterling, with the 64 pips, we are running at the profit of 362. What is the percentage there?
1:6.
1:6. You are a mathematician. Now we are greedy. Now we are greedy to move our stop loss here, right? Because if we now at instead of, we can of course close the trade. Of course we can close the trade. R to minus 10. R to minus 10 we can close the trade. Or because we are discussing moving the stop loss, so if we are getting out here at the stop loss, then we will be making 295 points against 63 points, which is almost 5%, which is happy. Rule of 4 happened, touch close below, preferably bearish bar low taken out, we are out. So now we got a percentage from here to there, which is 334 points. All right, so that was the my answer. Did I answer your question, Marty, or should I go to gold and 4 hour? What do you think?
No, that's fine. I'm
That's
happy.
fine. Happy. Very good. Last question before I hand it over to our guest speaker, Mauricio. Anyone speaking? Anyone writing? All right. So everyone got fed up with me, and then
I'll ask a question.
yeah, go.
I have a question. How do we analyze MACD as an indicator? Can we
Hmm?
just
Hmm?
little bit?
Hmm? Hmm?
Can I please show some light on that?
MACD.
That day.
MACD. I'll yeah, because time is running out. I'll answer the park that question, and
Okay.
I'll forward a beautiful video prepared by us, N P Financials, on MACD. MACD is having 5 elements: moving average, convergence, divergence, MACD indicator. MACD is having a five elements, and those 5 elements are the moving average, and then the moving average on the moving average, then on the moving average on the difference of that moving average, and then a center line, and then a divergence. These are the five points. If I have to discuss these 5 points, you have to give me 50 minutes, but you have not given, since you have not given me 50 minutes, you have to go first that video first, in our YouTube channel, and then ask me that question. Did I answer your question?
Yeah, yeah, I got the answer.
All
Refer to
right.
YouTube.
Now
On
with
my channel. On my channel.
okay. Now with all the pleasure, and now I'll take this opportunity to please welcome Mauricio to share his screen, and then take us through his brilliant tool which he is using for automatic position size, and over to you, Mauricio.
Great. Thank you for the warm welcome. Hi, everyone.
Hi, Mauricio.
I'm just over 2 months from that doing an advanced course. So I've been having my weekly classes, and what I'm about to show you is lessons learned as well. But really wanted to share some of a tool that I found, which would help with the allocating of the lots, or when we work out how many lots we need to put into the trade. So hopefully this will benefit to you as well. But I just want to give you a bit of a context. So can everyone see my screen?
Yes, I can see.
Fantastic. Thank you. Thank you. Yeah, again, so I'm still a student, so please, this is not financial trading or investment advice.
Me too. I am also a student.
Perfect. So if anybody wants to reach out to me, I'm on the Discord channel, so that's my call ID, or 3975. But let me begin. Perfect. So I just want to give you a bit of a warm up before I share the tool or the details of it. So basically, from my understanding and from what I've learned, we always risk only up to 5% of the portfolio. So I've got some examples here as well. So if our portfolio size is 1 million, then our portfolio risk would be 50,000.
That is 100 million,
Similarly,
my dear friend.
oh, I'm sorry. typo. My first correction. Um,
That's
okay,
all right. That's
so
all right. Three G's, two zeros extra. We love zeros.
yeah, that's right. That's right. Thank you. Look, but I've got here in the underline here. So 100,000 would be risking 5,000, and that's essentially what I'm going to follow through on the next slides. But essentially, if it's 10,000 our portfolio, then we're only risking 500. So when I'm saying portfolio risk, that's from the entire capital, right? I'll get in the next slide. We'll show you a bit of a more details. Any questions so far?
No, fantastic stuff.
No, yeah. And I'd like to open this. So if there's any questions, please, I want to make this an open session and get your comments as well. If I go to the next slide. Now, so we've said that it's 5% of our portfolio. So what makes up the 5%? Well, it's 1% for each assets class. So you've got your Forex, commodities, crypto, indices, and shares. So if we're saying again, the example of 100,000 risking 5,000. So if we break it up to 1% of each asset class, that's $1,000.
Correct.
Everyone agree?
Yes.
Yes, perfect. So again, so only up to 1% for each asset. So you can see here, I've got a nice pie chart, and each slice represents a asset class. Now, if I go to the next slide. Now we're going further into the slice. So once we've determined a particular asset, so this is an example that I've given you, and I'm going to look at a particular the Forex
alert
asset
triggered.
Class. What we can see here, because we're risking 1% of a asset, and I've got 5 Forex pairs, that means that it's 0.2% for each instrument for that class. So for example, again, let's go back. So it's 100,000 portfolio. We're risking 5,000. We're looking at Forex. So that's 1,000. So you can see the Forex pairs here, for example, I've got 1, 2, 3, 4, and 5. However, I know the recommendation, we have a recommendation or suggestion of 8 pairs, but I'm only looking at 5. So if we look at the 5 pairs, we can see here that it's $200 each that we're risking. So this means if there's opportunity for 5 instruments, that would be the maximum we would risk for each trade.
Yes. Correct.
Does everyone, with me here? Yes. Excellent. Okay. Now, we've got our, Excels, or we've got our spreadsheets that we could use or we could refer to. So this is an example. So I've just put in an Excel and put in all the amounts. That's what I went through in the previous slides. So you can see here, and this one's correct, 100,000, yes. 5%, 5,000. Number of assets in portfolio, 5. So that means it's 1% per asset, which means it's 1,000. Now, if I'm saying that I've got 5 instruments per asset, that's 0.2, which is 200. And you can see here that it works out to be 1,000. And what we need to do with every trade, we need to repeat this process because our capital will obviously change with the trades that we take. So repeating this constantly as well. And then working out how many lots, because this is just the beginning, because we know how much we want to risk, and then we just have to work out the lot sizes. So I was into the web and searching for a tool or some sort of calculator which would help me with my trading journey, and I did find something. I found an automated or a plugin that works with MT4 and MT5, and had put that into a demo account and just started practicing using this tool. Let me see if it comes up. So this is just a screenshot, but this is what the tool looks like. What I'm going to show you now is I'm actually go in and actually show you the tools itself. So let me just move this. Perfect, right. So this is the tool. I'm actually showing or sharing my demo account with you here. So it's called Position Sizer. like I said,
Can you
it
bring,
works with
sorry, Mauricio, can you bring that position size to the middle? Yeah, and it is not possible to make it bigger, right? Yeah, that's fine. Okay.
Yep.
No,
Okay.
no,
Yep. So yeah. So it's a expert advisor script, and I could share. I actually shared the link to support email.
We'll put it in
And
Discord, useful link. Yeah.
thank you. So yeah, once it's in there, and you've compiled it, let me just switch this on. This then comes up. Okay. But I wanted to show you or go through some of these points as well. So firstly, you've got this little position sizer icon up the top, and if we double click on it, went on my other screen. It'll give you some of the options. So these are pretty much the default options, and I won't go through each one of them, but just to highlight some of the options that we've got in here. So it's a very easy to use system as well. And a lot of rules that you can put in place as a default selection, and you could always save it. So you can save your settings so you won't lose them, and you could load them each time. So let me just cancel out of this. So what you've got here is a position sizer. Again, so it's automatically taking your entry. So at the moment, it's defaulted to instant. So you got these little buttons as well, right? So as you if you click on the buttons, it cycles through the options. So at the moment, it's pending. So if we wanted to put in a stop or limit order, we can put in the numbers there or the entry. And then we can put in the stop loss, or even in this example, I'll put a take profit just to give you an example of how it works. But otherwise, we could leave that blank. But if you keep clicking on it, it will change. So yeah, so for this demo, I'll just make it instant. So that's my entry at the moment, and I'm on Euro Aussie. The stop loss I've got is 146615, and the take profit for this example is I've got 147365.
No,
We know
go
it's
only up to
instant.
go only up to 4 decimal place and repeat from your entry. Your entry is 146.46, is it?
Entry is 146865.
No, don't go up to 5 because we only use 4 decimal place. Yeah?
Okay, I don't. I can't override
No,
that one.
that's fine. That's fine. Just read up to 4 decimal place. Just read.
No problems. Yep. Okay. All right. So then what I've got here is with my calculation, I've got 50 pips as take profit and 25 for stop loss.
Yes.
Does everyone agree with that?
Because we are entering at 86 and stop loss is 61, so that is 25.
Yep.
Exactly correct.
Yep. Perfect. So that's the options here. We also got a little button called show lines. So if I click on this, it'll output or show you the actual line. So here's your take profit line. This is your entry, and then you've got your stop loss as well. And the smart thing about this tool is that you can actually click and drag these lines accordingly, or you could actually put the numbers in directly as well. I prefer putting the numbers in directly. Most importantly too is the account equity. So it's smart enough to pick up your account balance or your equity and output it already in the calculation. So I've already determined it's 0.2%. So it's already, I've put a default setting of 0.2% in this little box. So that's always going to show, but we can always change it as well. So if we put 0.25, for example, so it's 4 instruments, you can see how everything changes. Yeah. Let me just go back to 0.2.
Yeah.
Beautiful. Now, so 0.2, so it's already determined that the risk, so this is a US currency US currency trading account. So it's determined the US, so it's $202, which is 0.2% of our account equity. Yep. The reward now, because we've got a target, it's automatically calculating the reward as well. So that's if we got a target in there. And because of that, it's giving you a risk reward. We know it's 2 because it's 25 to 50, right? 25, we're risking 25 to get 50 pips. So it's already calculated to 2. But again, this is the major point of using this tool. So this tool's already calculated according to what we've added here, that we should be risking, or the position size we should be allocating is 1.18. Does everyone agree? Any questions so far?
So if we are
Did
taking
anybody
one,
want?
yeah, sorry, yeah, let me take this opportunity. So to
Sure.
calculate manually, if the position size is 1.18 and we are taking a risk of 25 pips, so 25 multiplied by 1.18 is how much, Valinder? Or anyone? 25 multiplied by 1.18 is how much? Or 11.8, I think. What is this instrument? Euro AUD, isn't it?
Euro Aussie, yeah.
Euro Aussie.
Euro AUD, yep.
Euro Aussie, we all know that 1.19 is $11. How much it is, Mauricio? 1.18, is it?
1.18, yes.
So that is $11.80, right? I am correct? $11.80 per point, isn't it?
Let me just have a look. So you got these options here. Let me see if there's anything here that indicates. Yeah, so you got per. I'm not sure if that's reading right. Per lot or PS. I'm not sure what that PS means.
Am I correct in saying, this is one general question, am I correct in
Yep.
saying for a position size of 1.18 in Euro Aussie, does it not mean $11.80 per point, per pip? Anyone?
No, sir. No, no, no. It doesn't mean that. It is
I can't hear
point
you, Nikhil.
Yeah,
Can you get closer to your mic?
Yeah, Mauritius.
Yep.
Yeah. It's 11.1.8 because if we multiply it by 0.25, that's what is the position size? That 0.25 you said, right?
1.18 is the position. Okay, let's park this question.
So,
Nikhil, sorry. Let's park this question. I'll also park this question. Sorry, Mauricio. You go ahead and complete. Okay. As
Yep.
per the
Okay.
tool. As per the tool, this is 1.18. Okay, I understand.
Yeah.
Yeah.
Perfect. All right. Cool. So this is the main. So I clicked on main. So this is the main screen. But again, there's other options here. So we click on the risk. So I've actually got some options here. So you can actually count pending orders within the calculation. We can ignore orders without stop loss or take profit, or there's other options here as well. And you can see here that these are grayed out. So you could actually, so if we had more than one trade open and we're going for a second or third trade, you could see here what the current portfolio risk is and how many lots in total, as well as reward and so on. So it's a good handy tool to give you a running total for your portfolio versus potential. So it's looking at your open orders that haven't triggered yet. The other option here is your margin. So this is actually calculating from your brokerage as well. So it gives you your position margin. It gives your future and free margin as well, considering what we've got as well. Also, it tells you your maximum position size by margin as well. So it gives you all that options.
Default, sorry, custom leverage is 0. 0 is what? Because default
That's right. So if it's 0, I think it's just the default. Otherwise, we could change it here as well.
So default is 1:10, yeah?
Yes, that's right.
10, can you make it 1?
Yep.
Enter. It is
So we put 1. Yeah, you can see here that it's in red. So it gives you that that visual as well, saying, well, it's
17,000.
Yeah.
And 0, with 0, what was the free margin? Yeah.
The free margin, yep.
Yeah, very good. Excellent.
Yep. And then our next section is the swaps. So actually, this is actually pointing, getting information from the brokerage. So it's getting, okay, so it's points. It's identified as Wednesdays as the swap days. It's given us some amounts for that as well.
Yeah, swaps are calculated on Wednesday. That's correct.
Yep. Cool. And then I think most importantly too is your trading. So this is where you've got some more options as well. So for example, you can put in some, I haven't tried it yet, but you can put in trailing stops as well, or even break even. So it actually moves the stop loss once the price goes above your entry. You can put some commentary. So if we want to know what type of strategy or what type of the reason why you've entered, you can put some information in here,
And breakout or
and then
bounce, yeah, absolutely.
yep, then it'll go into your transaction as well, your history. So that gets entered in there.
Comment box, yeah.
Yep. And then here, maximum number of trades. So it's quite smart. So if I say, well, I only want to have a maximum of 5 trades, and if I'm organized and found for a 6th trade and I go ahead, it gives you a warning as well. So this gives you the ability to put some rules in place, and it will warn you. So at the moment, I'll leave it as 0 or remove it for now. And the other one too as well. And I found this one quite useful. So especially when I want to put some orders in, when the market was about getting ready to open, for example, you can see, for example, with in the mornings, we can see, for example, the yen with the spread greater than 2, for example. And this is when I don't want to particularly take the trades. So what I do is I put a maximum of 2. So this is 2. So if there's any if the spread is higher than this amount, it will give you a warning as well, saying that you've got your rules in place. But I'll just remove that for now. And there's some other information as well here. So you can have to subtract open positions, subtract pending orders, and so on. And then what I've got here is ask for confirmation. So if I leave this ticked, because if I go to click on the trade button, so if I'm happy with all the selections, I'm ready to put the order, I click on the trade, it will give me the confirmation. So you can see here, this box triggers this. And once you go through it and read it, so it's giving you the size, the equity, the risk, the margin, the stop price, entry, stop loss, take profit. If you're happy with that, you click OK. And you'll see that the order will then go through. But because the market's closed, I'll probably get a message. So I'm going to go to the experts, and it would say information about market close and so on. So we know, we know it's closed, so that's why it didn't go through. But normally you'd see the line come up. So look, overall, I think it's a good tool that I'm using, and I have actually done some testing as well. You can see here that I've actually started using the tool, and it's already, putting the volume amounts depending on my stop loss and my risk as well. Yeah. Any questions so far?
Oh, brilliant, fantastic tool.
Yep.
Any question
Great.
for Mauricio, please?
Is it free or not, this tool?
Absolutely, yeah. So this is the website, but I've given you the link to support. So essentially, this is a free tool. And the good thing about this is it covers all the main features, but it gives you the source code. So it's nothing that you have no insight into. So it gives you the source code. You have to compile it yourself. So once you compile it, it then becomes available on your platform. But there's a lot of instructions, a lot of detailed as well with all the different types. It goes into each of the tabs as well. So, for example, risk tab, it gives you an understanding of what each of these numbers indicate. So it's clearly identified here. Margin tab and so on. The downloads, if we scroll down a little bit, it gives you the downloads link. I keep going. You can see that there's a lot of information here. Yep, so here it is. So this is the downloads. At the moment, it's version 3.02, and they keep updating it. There's the link for MT4 and MT5.
Fantastic, brilliant. Thank you so very much, Mauricio. It's
And
a really fantastic tool.
There's some instructions here on how to install as well.
Yep.
Because there's,
And greatly, it is available in MT4 as well as MT5 as well.
Correct, yes, yep.
Which is fantastic. Yeah, thank you so very much. Really, Mauricio, really appreciate because you are running out of time. If we have any other question, please drop a mail to Mauricio or contact him in the Discord. Really appreciate. Thank you so very much. And I'll now request Marty to take us through till the end. Thanks a ton, Mauricio. It was great, fantastic.
You're welcome. Welcome. Thank you.
Marty, please.
Thank you, Mauricio. Very good. Very handy tool. I like the comment section that's valid within that EA. Nice one. I'll just share my screen.
Please.
Screen 2. Okay.
It's coming.
Can we see my screen?
It's coming. Yeah, now you can see. Correct.
Okay, so I think it might have been May, possibly June. We had a bit of a chat within this monthly session about interest rates.
I cannot see this.
No, it is blank. So please clear your
Okay.
Forex Factory. Can you see Forex Factory? Yeah.
Okay, so we were talking about fundamental news and how they affect the markets, and I came up with a bit of information about how the interest rates affect the stock markets. So as we can see here, we have the FOMC has released on these dates these interest rate changes of this much amount.
Very interesting.
Okay. So then when we come, let me put it on our chart.
Can you do that? You are sharing your screen minus, please, Marty, if you don't mind. Minus, yeah, thank you.
Okay, so this was our first interest rate hike. This is our second interest rate hike. This is our third. This is the most recent one here. So when the Fed announced that they were going to raise interest rates, it took, this is in a weekly time frame, it took this week that it got announced, the next week, and the week after, before we started to see an effect within the markets. So this was the point I was trying to drive home about fundamental news not happening straight away within the markets, well, not all the time. So this was okay here. And again, here we've had an interest rate rise, so something which slows an economy down, but yet we've had a positive reaction. We've had another interest rise here, so it's taken all this time here for the news to actually be felt within the economy and to start hurting people. So my main point of interest here was about fundamental news is not possibly the most reliable indicator you could use to trade with. Again, I can do this on the ASX. Okay, so this was our interest rate rise here. So this is probably a better example. This is on the daily time frame. But as we can see here and here, just taken all this amount of time for the interest rates to take effect and to start hurting people. Okay.
So that's an interesting. This is interesting. SPX went up after the first declaration of the interest rate hike, but ASX came down, isn't it, Marty?
Yes, absolutely.
Funny. Funny way of trading fundamentals.
That's right, especially taking into consideration the NFP, which is a highly manipulated sort of piece of jargon, I would relate it to. So I think they're just guessing numbers for that.
Non-farm payroll is a piece of jargon. Absolutely. If it is coming from China,
right.
think NFP coming from China. What will happen?
I don't know if the government would be too happy about giving the right information about that.
But
don't
he's
know.
too polite. My goodness. All right, go ahead.
Okay, so I just want to enlighten everyone about why I closed that gold trade out on early Saturday morning.
Yep.
Okay, so it was just with some wave analysis here. To me, we are still in a correction coming down. Okay, this is that same correction coming down. We have impulsive, corrective. As we can see, the angle of this is not as sharp as this. We have another correction. So we're pretty adamant this is a direct movement. We're impulsive with another correction. So now we have another impulsive down here. Now, I'm tending to think this is a correction, again, due to the messiness of all this stuff in here. And we have abnormal wave counts in here. Not only that, we have impulsive. This is a little correction. And this is starting to look something like a correction in here. Okay. We come down to our 4 hour. Pretty bad here. I haven't labeled anything. But again, we've seen this up move here. So this is where this started. We have come up to here. Now, the Elliott wave, we are always wanting to look at 5-3 combinations. So we've come up here, we went 1, possibly 2, 3, 4, and a 5. Okay, I thought maybe this could be our first impulse wave. Then we have 1, 2, 3, 4, 5, 6, 7, 8, 9. There's just too many. And the waves are too small.
Alert triggered.
So this tells us that this could be in a corrective wave due to rules not being met. There's a lot of messiness and there's just too little waves to sort of count. Then we have a 1, a 2, a 3, a 4, and a 5. Now, after I've seen this, I got a little bit scared because now, because of the angling here, possibly being a correction, I came up at the conclusion that this could be in a, oh dear, a B, and a C. So as well as that, and this small target being reached, and a strong reversal off it, I just thought it would be best to close this trade out. And hopefully people still can make money out of that. So that was just my thinking behind closing this order out for gold. As well as being at this 1700 area here, which seems to be a bit of a noisy sort of area. So maybe I just stay away from this market.
Our only job is to book profit and run.
That's right. Especially if everyone else is taking signals, and we have to look after everyone.
Yeah, absolutely correct. Brilliant. Fantastic. So questions to Marty? or Mauricio.
Is there any charts anyone would like to see?
Yeah.
Anyone?
See, Bitcoin and Ethereum are taking a bit of a dive right now.
Are they?
You see head and shoulders patterns on the 5-minute time frames?
5-minute time frames.
Yeah, I know it's a bit low, but nothing to do on a weekend.
I love it. Nothing to do on the weekend.
I guess you're looking at something like this, Ben. Is this what you're looking at?
Yeah, that's exactly what I'm looking at. It's just taking that bit of a hit right now, and it's coming straight back up to the 200 EMA, and looks like it's bouncing straight off it.
Oh, how good is that? So head and shoulders work really well. We can use Elliott wave with them. We can say a head and shoulders can be a topping pattern as a complete wave formation. There's generally a 3-5 here. So this can give us good double top entries, A-class double tops. And as well, it also is a good way to be used with Elliott wave as well. And possibly see down here. So Ben's saying it's bouncing off a 200 MA. Okay. Oh, look at that. Very good. What do you do now, Ben?
Ride it.
Ride it. All right.
Yeah, it's right on the 200 EMA actually at the moment. If that's just a simple moving average, is it?
I think this might be an exponential.
Oh, it's exponential. Okay, yeah. Oh, sure, just a little touch different from me, but yeah, pretty much on the mark there.
That's it.
So what to do there? Wait for it to see if it comes down and meets the measured move.
Yep,
Maybe.
and then use the position sizer.
That's it. Get on that position sizer.
Really. And you must have heard the alert trigger coming from ether. That's why it was touching.
Every time I heard it, I was looking at my chart after. I thought something must be going on. I better get on this.
So clever. Yeah, absolutely correct. Yeah.
Actually, the other one that looks very similar is Bitcoin right at the moment, which is on the 200 EMA.
Look
But,
at the way
yeah.
Bitcoin bounced here. Let Marty explain. Bounced from 18,500. My goodness.
Look at this. We've this low hasn't taken out this low yet. This is on a weekly time frame, so pay attention to that. You have a Yes, I still like this area up here. Maybe we could get there. Maybe. But still, this whole thing is not finished just yet. This could be another correction here. Could possibly do another one of these. I could be wrong. That's what could happen. What else? So we took a trade on the euro yen.
Correct.
Okay. So we've entered this guy here, just below him. We waited for the low to get taken out. Now, this is going to be a wave 4. Now, a wave 4 is going to be a bit of a painful wave, meaning it's always going to be messy like all this business here. So we might need to be a little bit patient for this one, but keep aware of those alerts, get those notifications happening on Discord, and you should be good with that. So we have like a...
If euro yen is doing that, then Girija's US yen is also do the same, isn't it?
Very much. I missed the entry on that. So this was the next best.
Look at that.
And these targets, guys,
Oh my God.
when you draw your targets, it is always best to use your monthly and your weekly. They are so good. Once you start coming down to daily and 4 hour, they still hold merit, but these weekly and monthlies are so strong.
I remember your call on Marty on yen going to 145. It actually went exactly there. Can you tell us the last when you said it is going to 145? When was that?
I think it might have been Monday last week.
No. Much before that, in a monthly class, I think you said that yen is going to go up to maybe last monthly class, maybe.
And it was actually touched on the same day, sir, when we were in the class.
Yeah, exactly, isn't it? So
Oh,
Girija
yes.
is taking all the calls from Marty.
Yes.
Oh,
I always learn and write and then follow.
That's good. It is so precise. I love it. 145.
Because I was exactly there when it just touched to 145 and then came back.
wow.
144.99.
Yeah.
Okay, well, I guess that's it from me then. If anyone has any questions, feel free to ask.
I think everyone is tired, and Ben's weekend is coming. He's not doing anything on the 5-minute chart now, coming to an end. Tomorrow is not weekend, my dear friend.
I look alive.
I'll still be looking.
Very
Brilliant. So if there is no other question to Marty or Mauricio or to me or anyone else, then I must thank you for all of you for taking time out out of your busy schedule, and especially on a weekend. And then you have a great week ahead, and happy trading. And bye for now.
Thanks.
bye for now.
Thank you, everyone.
Thank you.